If you run a landscaping business in Australia, you are dealing with two financial pressures at once. Your costs are front loaded. Plants, turf, paving materials, soil, and labor all need to be paid before the job is finished. And your revenue is seasonal, with demand peaking in spring and autumn and slowing significantly in the middle of summer and through winter. That combination puts real pressure on cash flow. And it is why access to the right finance is important for landscaping businesses at every stage of growth. Here is what is available, how it works, and what you can realistically borrow. Most landscaping businesses find traditional bank lending difficult. Your income varies seasonally, you may not hold significant commercial property, and banks tend to want predictable monthly revenue rather than project based or seasonal income. Non bank lenders understand trade and service businesses and assess applications based on your actual trading performance. Unsecured business loans are the most practical starting point for landscaping operators needing working capital quickly. You can borrow between $10,000 and $500,000 without putting up property as collateral. The lender looks at your last 3 to 6 months of business bank statements and your average monthly revenue. Approval can happen in 24 to 48 hours. For purchasing plants and materials ahead of a large job, covering wages through a slow period, or investing in marketing to grow your client base, unsecured finance is the most accessible option. Equipment finance suits landscaping businesses investing in mowers, excavators, trailers, utes, bobcats, or irrigation equipment. The asset being purchased is the security, keeping your property free and your personal exposure lower. Rates are more competitive than unsecured loans, and the structure is often more tax effective, with depreciation and interest potentially deductible. If you are expanding your equipment capacity to take on larger commercial or residential contracts, equipment finance is the right structure. A business line of credit works well for landscaping businesses managing ongoing maintenance contracts alongside project work. You draw what you need when costs arise, repay when clients pay, and only pay interest on what you are using. For businesses with recurring maintenance revenue alongside a regular project income, a revolving facility smooths cash flow far more efficiently than a fixed term loan. Invoice finance is worth considering if you work with property managers, developers, councils, or strata companies on account with extended payment terms. You advance up to 85% of outstanding invoices immediately after issuing them, rather than waiting 30 to 60 days for payment. No property or assets required. How much you can borrow depends on your monthly revenue and trading history. A landscaping business turning over $400,000 annually can generally access $40,000 to $100,000 unsecured with clean financials. Businesses with property as security or stronger revenue can access more. Most lenders require at least 6 months of trading history, with 12 months preferred for larger facilities. When you apply, lenders look at your bank statements showing consistent deposits, your trading history, your personal and business credit profile, and your ABN and business structure. Applications through non-bank lenders take under 15 minutes online. A commercial finance broker can identify the most suitable lenders for your profile before you apply. Brokers are paid by the lender and do not charge you directly. Use the free Business Loan Finder at Reliable Business Tools to find which loan type suits your landscaping business. 6 questions, a clear recommendation, no credit check, and no obligation.